In this video, I'm going to be teaching you the most logical approach to trading. I have a lot of models on my YouTube channel, but if I had to pick one out of all of them, this is what I would trade with. And no, I'm not bullshitting you because this is the strategy that I use on daily basis. It's not that I use one strategy every single time. I have different models for different market conditions, but this is like the final boss, right? If I see a setup printing, if I see a setup forming with the strategy, I'm going to take it with my eyes closed because it is very logical and basically it is the best approach to be trading, okay? To be trading with. So first thing first, I'm not going to waste your time, so let's get on with it. First thing first, what we need are key things, okay? So this is what this strategy consists of. Number one, we need to know the order flow on the higher time frame, okay? Order flow means, are we respecting bullish PD arrays or are we respecting bearish PD arrays, right? If we are respecting bullish PD arrays, which is bullish fair value gap and stuff on the higher time frame, it means that price is in a bullish order flow. Number two is, let's suppose that our order flow is bullish. It has to be going somewhere because market cannot keep on going up for no reason. It is going towards a target, and that target is going to be buy side liquidity on the higher time frame. Okay, so let's say that there are some equal highs resting around here on the higher time frame, and this is where the market could potentially go, right? And when this level is approached, you can expect a reversal or a continuation. So if we start consolidating above this and then get another expansion, you can look for another buy side liquidity to be swept. But this is how you know it. And the higher time frame is the 1 hour time frame. We are not looking at the daily time frame. We are not looking at the 4 hour time frame. We are looking at the hourly time frame. But if you want to identify liquidity, you can use the 4 hour or even like daily. But when looking at the order flow, you want to stick to the 1 hour time frame. Now, we have understood how to identify order flow, right? So if we are respecting bullish fair value gaps, bullish order blocks, we are in a bullish program. And if we are respecting bearish PD arrays, we are in a bearish program, right? Bearish order flow. So, and then we also have like buy side liquidity, right? That I mentioned before, right? And that's it. Step number two is that we need to have a target, okay? And step number three is very important, okay? I'm gonna go over the entire strategy here. So let's assume that our order flow is bullish and we have our draw liquidity on the 15-minute or the 1 hour or the 4 hour or the daily time frame. Now, after 9:30 a.m. New York time, right? This is very important. Also make sure that you set your time zone to New York. After 9:30 a.m. New York time, what I'm waiting for price to do is for price to form a 5 or a 15-minute fair value gap towards your draw on liquidity. So step number one, we are in a bullish order flow. Step number two, we have clear targets. Step number three, we create a 5 or 15-minute fair value gap, right, towards our draw on liquidity. So this is giving us a lot of conviction. Why? Because we are trading with the order flow direction. We have clear targets to the upside. And when we have a 5 or 15-minute fair value gap, right? So let me just do this real quick, right? Let's say we have this fair value gap. Now, what you want to do is drop down to 1 minute time frame. And within this fair value gap, what you're looking for is a specific type of behavior. So first thing first, we need a fractal price model like this. I want to see price do this, okay? So price taps into a fair value gap, right? We have some liquidity sweep, could be a little low, it doesn't matter, right? And then what you want to do is on the 1 minute time frame, you will mark out a fair value gap like this in this leg, right? From this high to this low. And you're looking for inversion to the upside, inverse fair value gap, okay? Inversion is when we have a bearish fair value gap, but price closes above it. And now this becomes a inverse fair value gap, okay? And it's gonna support the price up, if that makes sense. So when we get a close above the fair value gap on the 1 minute time frame, right? What we are looking for is our entry. But before we take our entry, we need to be very cautious of this one rule. So in this leg on the 1 minute time frame, we can have multiple fair value gaps. So we can have one over here as well. So in that case, I want both of them to get inversed and not just one, because that would invalidate the fractal based bearish order flow. Okay, because we are not respecting the bearish PD arrays on the 1 minute time frame anymore. So that is going to be my entry, right? And I'm going to put my stop loss somewhere around here or below the low, and I'm going to target first of all the 15 or 5 minute high, right? This is the 5 and 15 minute fair value gap, right? Could be 5 or 15 minute fair value gap, and this is a pullback, a high that caused a pullback. So this is going to be my first target, right? I can take a partial here, right? And then I can target the clear draw on liquidity that we have. Okay, these could be equal highs on the 1 hour, 15 minute, and whatnot. Also, for risk management, what I like to do is I like to go break even at the closest liquidity level. So after our entry at the close above these fair value gaps, as soon as price takes out this high over here, I'm going to move my stops to break even. And that is for a lot of reasons, okay? Because this model, if you use this break-even technique, you're going to have like a 65-70% win rate, okay? And this model is crazy. And this is like the most logical approach because we are trading with the order flow. We have clear draw. We have everything in alignment. And I'm going to give you one extra confluence that you can use, and that is going to significantly boost your win rate. And if you can implement that, that is going to be perfect. And that is called SMT divergence, right, with ES. So ideally, we want to be trading NQ or MNQ, and we need to see SMT with ES. What is SMT? When NQ makes a lower low, lower high, lower low, but ES, which is a correlating asset, right, it fails to make, let me just do that real quick. It fails to make another low, right? And that is SMT divergence. And then you can take like your inversion and target these levels. And vice versa for like shorts, right? If you are in a bearish order flow, we can utilize the 5 and 15 minute fair value gaps after 9:30 a.m. New York time. Ideally, the first fair value gap that forms after 9:30 on the 50 minute is very strong, okay? And that is gonna start the distribution or expansion, right, towards your targets. But it doesn't mean that you cannot use other fair value gaps. I'm going to show you guys a lot of examples, and that is going to clear out each and everything. So without wasting any more time, let's move on to the examples, and please hit the like button because this value is insane. All right, guys, so here is example number 1. And first off, we're going to mark out our draw on liquidity, right? So on the 4-hour time frame, I can clearly see that we have these equal highs, and we are also going up. But we need to confirm the order flow on the 1 hour just to be extra safe. So let's go to the hourly time frame, and you can clearly see that we have been respecting bullish PD arrays right after we inverse this new week's opening gap. So when we get like new week's opening gap inversion on the 1 hour time frame, that is a significant sign that market wants to go up for the entire week. And you can clearly see that we've been pushing up, right? We've been respecting the bullish fair value gaps here, right? We have a breakaway gap here as well, which was not, so this shows displacement, big volume. So the third step is that after 9:30, we are looking for a 5 or 15 minute fair value gap to form. Because now we have our target up there, which is the equal highs on the 4-hour time frame. We have bullish order flow on the 1-hour time frame. And after 9:30 a.m., we have a fair value gap forming here. And we have one small tiny fair value gap forming here. So let's see how you could have utilized both of these fair value gaps and also one over here as well. Okay, so let's drop down to 1 minute time frame. Now, this is where we tap into the fair value gap, okay? This is the 15-minute fair value gap. We tap into it and try to identify a fair value gap. There's only one over here in this leg, right? And when I look for inversions, right, I need a strong volume inversion, meaning like consecutive candles that inverse the fair value gap or something. I don't want price to, let's suppose, take liquidity here and then start consolidating here and then inverse, because that is classic accumulation manipulation and you can get wrecked by doing that. We need a displacement to the upside, right? Now, this could have been your first entry. However, in this case, I might have gone a break even a little early, but since we got our inversion over here, I wouldn't go break even that early because literally that makes no sense, right? So what I would do is I would put my stop somewhere around here, and I would literally look at, like, let's say if there's nothing to the left side, I would say, okay, if the price hits 1 to 1, I'm gonna go break even, and I probably might hold for like 1 to 1.5 or even like 1 to 2, right? And that's how I would play it. Now, this is the second time we tap into the 15-minute fair value gap, the fresh one, right? And you can see we have a high, right? And we inverse this fair value gap, these multiple fair value gaps, right? So this right here is a 15-minute fair value gap that was formed again. We tap into it, we get displacement, we inverse above all the fair value gaps in this dealing range, from this dealing range high to this dealing range low, right? And we pretty much just keep pushing up, right? We keep pushing up, and then we have another fair value gap forming here. And you can clearly see when we tap into it, we have liquidity sweep, right? Classic stuff. And we have this, all these fair value gaps, right? So we have 1, 2, and 3 fair value gaps here. 1, 2, 3, right? So we wait for all of them to get inversed, and just around here, that is during PM session, this would have been your entry. Stops below all of these inversions, right? And in this case, you may have not hit 1 to 2, unfortunately, but you get the idea, right? You could have gone, like, you could have taken one partial at 1 to 1, held till 1 to 1.5, but in this case, it just didn't go towards the 1 to 2. So let's move on to the next example. All right, guys, so here is example number 2. So if I go on to the hourly time frame, again, we are clearly bullish, right? Until here, 9:30, right? We are respecting bullish PD arrays. I mean, look at this order block over here. We got the bullish order block over here, down close candle. Respecting it, pushing up, displacing higher, right? Accumulation, manipulation, distribution. We keep continuing higher. We respect this fair value gap on the hourly, we displace. So the order flow is clearly what? It's clearly bullish, right? Now we can go to the 4-hour time frame and see what we got going on here over here. So you can clearly see we have this a little bit of like consolidation here, which is like the start of a market maker sell model, and this is like the original consolidation. So this could be potential draw on liquidity for the coming days, or if I'm right, we could be targeting these equal highs up there, which are like these very clean levels, right? So that's it. That's your target, right? And then let's go to the 5-minute time frame and see what happened on this day. So 9:30, right? We are waiting for a bullish fair value gap. Why? Because we are simply bullish, right? There's no reason for you to be taking short positions, and that is why a lot of people get wrecked so many times, is because they trade against the order flow, right? And again, we have this fair value gap over here, and I was actually trading this day, and I took a decent trade somewhere around here. The rest of them were kind of break evens, and yeah, they were not. There was not much displacement, except there was one trade. And you can see, you can mark out all these 5-minute fair value gaps, and when the order flow is clear, right, it doesn't mean that it's going to keep on doing that. We're going to have deeper retracements, and potentially we retrace back into a 15-minute fair value, which is absolutely right. You can see we have a 15-minute fair value gap. So if I use the FIB tool, you can see we had to come back into the discount to continue pushing up, right? I hope that makes sense, right? But let's just go on to the 1-minute time frame and see how you could have utilized this fair value gap, and also let me just disable the session so you guys can clearly see the fair value gaps marked out. So let's just draw down to 1-minute time frame and see what happened here. So this was the first fair value gap, and we had this fair value gap, right? Now this did play out perfectly, and what I would do in this case is, right, since we got our inversion around here, right, I would trust this and put my stop below this volume imbalance, because we are already way up, right? And we got these equal highs here. So this could have been my, you know, I wouldn't really go break even that early, but at least like at 1 to 1 most of the time. And this was a break even. If you didn't like, if you held till 1 to 1.5, you could have went for break even in this trade, right? But no hard feelings, because you're gonna get break even a lot of times, and you know, sometimes you're gonna get it break even again and again, and that is simply not your day, if that makes sense. So we have this another fair value gap here, right? If you took this entry, well, good job. But then we have this fair value gap right over here, and unfortunately, also one more rule for those who have left this video. This is a very important rule. So this is the closest liquidity rule, right? This is the closest liquidity, and the candle didn't close below this closest liquidity. But instead, while it was forming, it took out the closest liquidity level. In that case, the setup is invalid because we don't have a break-even point. And price could simply reverse from here. We are not taking any risk, okay? I hope that makes sense. And we have this another fair value gap here. And again, this was, unfortunately, another break even in this case. The reason why I'm showing you is showing you the reality, okay? This can happen to you. Okay, you can get close at break even. Don't get discouraged, okay? Just follow your plan. You could have taken your entry here, stops here, and you could have gone break even at the sweep of this. Although I would still really like hold till 1-to-1 at least before going break even. And this could have been my full TP here, right? As I've said before, I just like to play. Like to use some discretion with this as well, when to go break even and when to not. And we have one more fair value gap here. I think I've used pretty much all the fair value gaps here, but let me just go here and let's just see what happened. And I think there was one fair value gap over here. Okay, perfect. That was the setup. That was the setup that I was talking about. 500 fair value gap, right? And we get inversion above this. And pretty much you can see that this could have been your break-even zone in this case, right? This is your entry at the close. And you could have targeted 1 to 2, right? Now, our higher time frame draw is up there. But it doesn't mean that if you take a trade here, it's going to keep on continuing higher, right? The draw on liquidity just gives you conviction that, okay, we are trading with the right direction of the market. It doesn't automatically mean that just because we have equal highs up there and the order flow is bullish, it's just going to keep on continuing higher. The markets don't move like that. They're going to have deeper retracements like this, okay? So a fractal short-term downtrend, and then we're going to have another push to the upside. So that's going to be it, guys. Thank you for watching. I'll see you guys in the next one. Take care. Goodbye.